We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Jamie Strauss, founder and CEO of Digbee. He also has 30 years of experience in mining finance. How are you today, Jamie?
Hi, I'm really good. Good to see you, Tom.
Great to see you as well, and happy to have you. So, Jamie, why don't you give us some background of how your experience of reviewing mining projects and companies has led you to building this platform and what Digbee really is?
Okay, thanks, Tom. Really, it goes back a few years where after quite a long period of time in mining finance, I wanted to address some of the issues which I felt were holding the industry back from really kind of being perceived as a really great place to invest. We don't have a great track record of taking projects through to production, and I wanted to be able to mitigate risk using a platform-based approach, but using publicly available information, which is frankly very complex and not easy to digest for most people, which would ultimately lead to improved execution by many of the companies and ultimately mitigated risk by the investors. That to me seems an obvious approach, which would ultimately improve the outcomes and the valuation of the sector as a whole, and hopefully bring in new pools of capital and confidence to the sector. But it was through that, and when we launched Digbee Research in March last year, I was approached by a number of key stakeholders within the industry to come up with an ESG solution for the junior mining sector. And that's really kind of taken on leaps and bounds, and perhaps not surprisingly, given the general news we see of where ESG is in the world. And ESG is the silver bullet for the junior mining industry. I mean, I think we've been looking for something which can bring this industry together and improve the perception of the industry, improve confidence, and ultimately lead to new pools of capital coming in and hopefully fundamentally changing not just the confidence in how we operate, because so much good has been done by this industry in particularly the last 20 years. If anybody look at the health and safety records, it's a dramatic improvement. And there's no reason why we can't change the perception of this industry. So it was driven by the capital providers of the industry to come up with this solution. We've really enjoyed the kind of research and understanding of trying to understand what the problems are, which is frankly confusion with regards to disclosure, to then come up with a solution for that and ultimately help improve efficiency, remove the confusion for the junior miners, and at the same time allow them to get rewarded for the actions that they take on the ground, and ultimately, I think also to address the obligations of the boards of directors, which are increasing for those boards, and again, hopefully bringing in new pools of capital and confidence to the sector for a much wider audience.
Mm-hmm. So, Jamie, ESG disclosure is becoming increasingly important. And to really highlight this fact, we're actually speaking the day before you're presenting at the G7 summit. So what is the goal of this presentation?
Well, I think the world's press almost kind of explains it better than I can. I mean, at the end of the day, ESG has taken on a role which I think is affecting every single company, private or public, in the world. The mining sector has a particular problem because none of the standards, global standards within ESG, were written for the junior miners. In fact, they were written for the very senior miners only. And therefore, it's a real challenge to know what to disclose and how to disclose. So when we came up with a solution for this, it was to bring the whole industry together. And as I say just now, is to improve the confidence within the sector, because the sector's commodities and its products are required for the industry to move to a low carbon economy. And the industry should not be afraid of this. They should be embracing this because there can be the benefits on the ground in terms of raising capital, in terms of addressing the conundrum of whether or not where the mining industry sits can effectively be addressed by ESG. And so the G7 the G7 conference is a great way for us to get out beyond the mining industry and to try and encourage the world as a whole, the generalist public, so to speak, as to the benefits of the new companies, the developing companies, who do not have the legacy with which obviously some of the larger companies do have, in understanding what ESG is, how it impacts the mining industry, and ultimately how these new companies can effectively be seen to be embracing it and getting their commodities out to effectively save the world with regards to windmills, batteries, et cetera, et cetera.
So, Jamie, for those that aren't familiar, what is ESG? Can you give us a quick rundown on what standards and what that all stands for?
Yes. So ESG stands for Environmental Social Governance. It stems from the UN Social Development Goals, which I think were founded in 2013 or sometime around there. And there are now many global standards relating to mining. There are about 44 of them, either generic or specific to the mining industry. And it's a means for companies to effectively identify the relevant topics within the social development goals, and attest themselves and to disclose relative to those, rather than just on a financial basis. Now, with regards to mining, the industry's been practicing ESG for many years, decades. They have a social license. The problem is how do you disclose what has effectively been going on in practice and get it out so that people can understand it? At the moment, you can get it out, but nobody's standardizing it. So therefore, there is no comparison, there's no standardization, and therefore we're losing the benefit of how this can effectively support the world, let alone the industry as a whole and the individual companies.
So, Jamie, who sets these global standards, and do you provide that as part of your framework?
Yeah. So to your first question, these global standards, to some extent, have been around for a long time, although new ones come out all the time. You've got the World Gold Council have got a global standard. SASB, GRI are the two big generic ones. The UN Social Development Goals, I see that as almost the kind of grandfather of all of these, which everything kind of almost stems down from. And then you've got Equator Principles, IFC, et cetera, which effectively, some of which have been I think Equator Principles came out in 2003 and has been used by largely the debt banks for many, many years. So they've been, these global institutions have effectively set up most of these. What we did is that we acknowledged the fact that the confusion as to what to disclose and how to disclose is magnified by the fact that there is so much to choose from. And for the small companies who just want to kind of basically discover gold or discover copper or whatever it happens to be, they just want to get on with what they're doing. But recognizing the fact, and there's been almost a tsunami of support for this, but they just want to know what to disclose and how to disclose. And nobody's saying you have to disclose to X or Y or Z. What they are saying is you've got to start changing some of the conditions on the ground and in the boardroom to prove effectively what you're doing. So that what we've done is we've mapped these global standards and we've created a best practice set of frameworks that are aligned to those global standards so that people can and then right-sized it for development, for exploration and production. And so that those companies can easily take that off the shelf, answer the questions, provide evidence to support, be independently assessed, and come up with a transparent score so that they can effectively use that as a communication to go to their stakeholders, whether it be local stakeholders, insurers, capital markets, NGOs, governments, local governments, or whatever.
As you just mentioned, Jamie, there's really three different tiers that you're catering to in a way. So can you explain to us what the differences are between those three different tiers of stage projects? Yeah,
sure. I think the easiest thing is to put people's mind at rest as to how complex this is or how simple this is. Mm-hmm. So the exploration framework carries about 65 questions. So 25 or 30 or so with regards to the corporate, and then the project having the balance. And each of the project questions are split between context and also with action. You can't really change the context. context of a project is the context of a project, but you can change the way you're effectively addressing best practice. And that's really what we're trying to encourage and improve upon. In the case of the development stage, there's about 108 questions. And the producing framework, which we still have yet to go live with, which will be in September, will obviously be a little bit larger than that and a little bit more complex. I should add that it is company paid for, so it is paid for by the corporate, but only at the time of submission, so they get the benefit of the frameworks, almost as a blueprint to know what to disclose and how to disclose it, support their answers with evidence, send it to their board of directors, which therefore incorporates their obligations under corporate governance. And then we raise an invoice at that stage before an assessment.
And even it provides them with just a basic understanding of what they should be working towards, correct?
Yeah, I think it's actually a little bit, it's a little bit more. We're trying to help these guys go from one submission to another submission and help them down their journey effectively. Mm-hmm. There isn't a pass or fail. And we allow the company in their inaugural year to hide that score for up to 13 months so that they're not put off by a single score, which they may consider to be negative. I would add to your listeners, I don't think any fund manager is looking at a particular score with regards to ESG today. What they're looking for is, particularly at the 85% of the industry that are not in production at the moment, they're looking for embracing ESG and making sure that they're dealing with that and moving that journey positively forward over a 12-month period and beyond. So it's a journey. It's not a pass or fail, and most importantly, it's a gap analysis to know where one is effectively weaker and areas that you can effectively improve upon. And we also allow or encourage a Zoom call with the assessor so that we can effectively add that value at the time of the conversation, along with obviously a report that goes back to the management.
So how does the platform reward management in this space? Is it simply by providing exposure that management is taking these actions?
Yeah, so it rewards management, really. It helps management know the areas with which they're potentially weak on and where they can effectively improve over time through a scoring system based on the overall score for the company, which is an amalgamation of the corporate and the project. But you can look into the detail of each question that has been answered. So water or social engagement or whatever it happens to be. And because it's a credibly assessed professional assessment, which is publicly available, then it encourages management to actually make those changes on a year-by-year basis, see their score change, base their project on a context basis. So if you're in a jurisdiction which is obviously maybe a little bit tougher than another jurisdiction, it's apples for apples. You're not comparing unfairly. As I said, we want to encourage mining around the world where it's legal and as long as it's the best practice. And I think the other thing which is important, is that fund managers are looking to invest in the mining industry from new pools of capital as well as existing, but they're looking for management who genuinely are engaged with ESG because they now have empirical evidence to suggest that those companies which are well structured, well managed, have a lower risk, and therefore the cost of capital will be lower, and there is a greater pool of capital in which to access from. So it's the transparency of the process by asking pertinent and nuanced questions related to mining, which effectively allow that company to then plot its journey through improvement year on year.
Jamie, when you were mentioning some of these fund managers or funds that are looking maybe ahead of the curve on this ESG framework, who are some of the financing institutions that were encouraging you to come up with an ESG disclosure solution? Yeah,
so that's a great question because it's kind of snowballing now. We're getting rung up. We're getting asked to include testimonials by groups, and I'm really pleased that this is now not just buy side, it's sell side, but it's also producers as well. More specifically, look, we've been quite open that BlackRock and Orion Mine Finance were the two groups that approached me independently, but within about a week of each other to come up with a solution. But BMO has been front and center during last year and early this year in terms of testing and helping. Sibanye, Teresa on the producers. We want to minimize friction when it comes to M&A, and therefore having producers input into the frameworks to ensure that producers can use the output as well of these reports to cover their due diligence requirements is equally important. Dundee, which will be well known, no doubt, to many of your listeners in Canada, have bought 5% of Digbee and are going to make it a prerequisite for any of their future investments going forward. There's a whole list that we've got. We've included Standard Chartered, Newton, a number of different sell-side brokers in the UK, Canaccord. I mean, it really is. It is kind of snowballing now across the different areas, which is really encouraging.
So another big part of the site, Jamie, is the mining report side. So what do these reports cover and how are they compiled?
So the mining reports or the mining research goes back to the initiation of Digbee back in 2016 when I wanted to mitigate risk and to create a better outcome. And the idea is really just to go through SARE 43101, split it out into geology, metallurgy, and engineering, and then effectively do an objective plain language report, which can identify the opportunities as well as the threats, which may relate to that investment or that development from a mining company's point of view. I had one particular company which bought the report on its own project, and they said, "Wow, this was a little bit eye-opening. We don't disagree with anything you've said. It's not 100% supportive for us in the short term, but we're going to use that to make sure that we de-risk the project into the next study that we do." And I think that supports everybody. It supports the management team. It gives them the ability to, discuss with their consultants. It supports the investors. It supports new investors. And ultimately, it supports local communities as well, because it doesn't help when a project fails and a local community with high expectations, perhaps, suddenly realizes that there are major problems. So it is a de-risking process. I think it's a positive move for this industry. The feedback we've had has been really supportive, notwithstanding the fact that, we're creating a new form of research, Tom. It's not something that is immediately kind of going to go, kind of wild in the world. It's a new form of research which you have to pay for. But I think most big fund managers, whether it's a private equity group or a large institution, are trying to de-risk their investments. A kind of private equity group will spend $100,000 on doing due diligence. Now, is that appropriate for every single project they look at? Probably not. And therefore, how can we better improve that process through independent due diligence?
So, Jamie, how do you ensure the objectivity of, let's say, the people that are writing these reports, or just the reports themselves?
So we created a expert network of mining professionals, and we approve those who are accredited within their own industry. And then we give them the ability to write research using our standardized formats. We give them, obviously, professional liability insurance. We give them all the tools that they need to effectively write, other than their own knowledge, which is what we're effectively hoping to harness. And they get 50% of the income on any sales. And in some cases, we will pre-commission as well. When we've got a particular client interest, we will go out and identify a specific author on our expert network and encourage them with perhaps a pre-commission or something, given the fact that we've got some interest from specific clients. So that's really the incentive, and they obviously get a digital presence with the fact that they are writing independent research, which goes up on the Digbee platform. And over time, we'll then expand on that in terms of having like an Uber score for them, which will be the the people who've read the report will then be able to give an objective report score back, just like being in an Uber cab, so to speak.
So will this help the mining industry become more honest as a whole? And is there a way to track how accurate the feasibility studies done by the companies will be over time?
So one of our clients and me just asked me just last week to say we'd love to have kind of a track record of which authors have said what with the backward rearview mirror looking thing, and I think that's brilliant. And yes, we're definitely going to incorporate that over time. I think the first and foremost thing is from these feasibility studies is they're extremely complex and very few people are able to read them. And therefore, if we're to encourage new money into the industry, new pools of capital, and for those pools of capital to find confidence in their investment, then we need to make this sort of information available. There's natural management bias when a management is presenting. That's not necessarily dishonest. It's just a natural way of marketing a company, whatever industry we're in. And to kind of, to some degree, bypass all of that technical knowledge before you come up with an investment decision, which the private equity guys go into deep detail. So if they do it, why shouldn't other people be able to have that same available information if it's easier to get access to it? It's immediately on demand, and at the same time, obviously much more appropriate in terms of cost basis. So that's what we're trying to achieve. Will it make the industry more honest or not? I don't think I really necessarily want to go down that route. I'm just trying to say I want to get better outcomes. And some of the outcomes which fail aren't because of dishonesty, but can be because of a lack of risk mitigation effects that can take place if we had more information available to us. Or perhaps we were maybe more realistic with ourselves in terms of the complexity of taking these things forward and not wanting to maybe be 60-40 debt equity and perhaps kind of having a slightly different approach to that. So I think it's a multitude of things which have got us to a track record which perhaps isn't great, but there's so much upside from there if we can just try and address some of those issues to help both the management teams but also the investors as well.
So this really becomes more important for investors as you provide risk ratings for several different project parameters. So what types of different parameters do you evaluate within the projects? So
each of the studies, so geology, metallurgy, and engineering, have been the frameworks or the skeletons of these templates have been put together by appropriate experts, and we try to make sure that they're easy to read and they're easy to understand. So they flow in a similar way to a 43-101, but effectively being written in plain language. So one of the big things that comes out on a geology report, for instance, is variography. And I don't think anybody would disagree with with Robert Friedland's copper deposit in Congo. And the geology report we did on that was absolutely outstanding. I mean, it just highlights the quality of that report. But at the same time, there wasn't a public variography. And that didn't help the confidence in the underlying resources and reserves, which could have been done through publicity. And the company fully acknowledges that. And the fact is that variography was done. They just hadn't published it. But if you're going to get it assessed by an expert geologist, an accredited expert geologist, they will want to see that data. So I think it's just a way of identifying the areas which wouldn't otherwise necessarily have come out in the process, because most of us are not qualified to know what to look for or not look for. And this effectively allows that to materialize. And that relates similarly to metallurgy as well as engineering. Are the bench sizes the correct size for the machinery that's going into an open pit? Is the development work, for instance, in an underground mine, sufficient to allow the ore to come out of the production, maybe a year or 2 years ahead of time? going to happen? So there's all of these little different questions which relate to individual experts, which really help give the reader an understanding of, wow, this is a low risk or it's a high risk investment, which can then be basically taken into account of evaluation. We don't do valuation. We're just mentioning the positives and negatives that relate around it.
And, when I was looking around on the site, there's even a rating based on grade of the ore and how that will relate to, for example, the nickel price. So it really takes a lot of different things into factor.
Yeah, we did a report on a rare earth deposit, and there's no doubt that rare earth deposit is there. But there was no pit shell there. The cutoff grade was 50% of any other producing rare earth deposit in the world. There were no reserves disclosed at the time of the PFS. Not illegal, but unusual, I think is fair to say. So there were a number of different things that came out, which immediately raises concern as to the not so much whether or not the deposit is there. I don't think there's any doubt about that, but in terms of the economic viability of that, and more questions need to be asked before you could effectively come to that conclusion. So I don't know if that answers your question, but all of this is very much standard within all of our studies. And I really think it is going to help mitigate investment risk, but also development risk.
So what is next on the timeline for Digbee development? Are there more features in the works for the platform?
Yeah, like with all tech platforms or whatever, it's a continuation of iteration. Clearly, we're focusing on the ESG side at the moment in terms of iterating. The front end of the system still needs to go live. The back end is fully operational. The development framework, though, is for developers, comes out in the next 2 weeks. The producing framework, as I think I said earlier, comes out in September. So we'll then be able to do 100% of the market. And then there's loads of wonderful things you can do in terms of analysis of ESG, in terms of comparing one company against another or a project against another. The corporate profile page will have a massive reboot so that all corporates will be able to have their own page, so that effectively all data, whether it's company directors or ESG scores, or if we've got research out on it to highlight that, all of this is going to be really improved so that it's the central database and the central form where people can come to in the mining industry and effectively get, arguably, I guess, risk mitigation. I mean, ESG is risk mitigation. So all of this data in one place.
So, Jamie, for let's say producers, will carbon credits or carbon emissions become part of this evaluation?
Yeah. So our tools are a disclosure tool, and we make sure that right from the beginning, even at exploration level, that we ask pertinent questions to make sure that people are beginning to understand that we've got to try and reduce emissions in the world. Actually, having a calculator at the moment for an exploration company doesn't make a huge difference. There are lots of third-party calculators out there. That's not the fundamental focus of Digbee. What we're trying to do is to encourage people to understand what ESG is and to effectively affect change to impact ultimately their ultimate emissions, their impact on the on nature, their impact on social communities, as well as governance just generally. When it comes to the producing framework, obviously emissions is much more relevant. And I think one of the areas that we're trying to grapple with at the moment before we conclude the producing framework in September is to exactly how to address this. As I say, there are a lot of calculators out there. One doesn't need to reinvent the wheel to what we're trying to achieve here. Nobody quite knows what good disclosure is or good emissions is and bad emissions is in terms of numbers. So I think what we'll probably do is we'll probably start off on the same basis as exploration and development. So it's not a reporting tool because that is effectively handled by many other areas at the moment. But effectively that we can encompass that to encourage change on we go, and perhaps have a third-party calculator which people can which we can send people towards and help them conclude on that bit as well.
So, Jamie, can you give us a sense of who the site is basically catering to? Is it investors? Is it companies? Who does it really provide a good framework for?
Yeah, so it's because it's a platform. It works on both sides, and so it's really important. First and foremost, from the ESG standpoint, is that it gives management the ability to know what to disclose and how to disclose their ESG. That is the biggest single problem for the mining industry, let alone other industries, at the moment. There's complete confusion. There's no standards available for them to effectively take off the shelf and apply themselves to. So that answers that very straightforward. It allows them to have their gap analysis. It allows them to deal with board oversight all in one very simple go through that side. But equally, it is the standardization of these frameworks, which therefore allows the third parties, and I make sure I say third parties generally, because this is not just capital providers, although they are a significant part of this. It is insurers, particularly at the producer level, who now know that ESG is going to become an increasingly important function to price risk, as well as provide capacity of risk. In addition to that, local stakeholders want to know what a company is doing in terms of ESG. At the moment, it's a little bit difficult for them. It's all one-sided. It's kind of from the company and what they're prepared to disclose. And this effectively allows a nice, transparent, easy to operate process for the local stakeholders just to get access, free access, and go for. But in addition, the one I really like is young people. Like Glassdoor.com, people want to know, is it a good company to work for or not a good company to work for? This industry has a big problem in hiring new talent, younger new talent. And this will allow anybody to go onto Digbee and identify whether or not companies, A, are embracing ESG, and B, whether or not they're continuing to evolve and move positively forward, and therefore hopefully bring in new talent into the industry. And it goes wider than that, whether it's private equity or fund managers, NGOs, local governments, etc. Hopefully, this will balance the narrative and encourage mining companies to get a better, or encourage the world to give mining a better form of perception and confidence.
Mm-hmm. Excellent, Jamie. Do you have anything else you'd like to add before we wrap up here?
No, I think that covers it. I'd encourage anybody to follow us on LinkedIn or Twitter. We're giving updates all the time on that. We've got some a couple of great reports coming out later this month on Marathon's Valentine project, on Sabina's Back River project, for instance. If anybody wants other technical reports written by Digbee, then just give us a call and we can encourage people to move forward on that. And look, the CSG thing is, it's a dragon with a big tail, and we're hanging on. And I'm excited to see the adoption or the embracement by so many companies within this industry. Who I don't think I've had a meeting who says we don't care about ESG. It's not for us. I think literally. Since March, when I started this process, the industry says, just tell us what to disclose, how to disclose it. We want to be up there. We want to show the industry. We want to show the world that we are above and beyond, and that we have been doing good things for the last 20, 30, 40, 50 years. And I think there's a new breed of company coming out who really wants to produce the right commodities to help the world in a new low carbon and sustainable way.
Excellent. Of course, the website at this point is thedigbee.com, but you said it's probably changing depending on when people are viewing this to just digbee.com, correct?
Yeah, that is true. But you can put in both. We'll have the domain names for both, so either works.
Excellent, Jamie. Thanks so much for your time today.
Thanks, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.